Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Brian Hayes. And we've brought you two Zacks #1 ranked stocks that are in completely different industries, but that's okay, because during this kind of turbulent market period, you really want to be paying attention to these top stocks, these Zacks #1 ranked strong buys. How do they get #1 ranks? It's because their earnings estimates are on the rise. They're actually increasing, not being cut. So who are these fantastic stocks? You can find them every week here on the Top Stock Picks. And this week, I'm going to start us off with a bank. Yes, I know you're thinking, that's boring, Tracy. We don't like the banks. But now, in these market conditions, with the Fed raising this aggressively, you should like the banks. My bank is WESBANCO, WESBANCO, with the ticker WSBC. I've liked them for years. Why do I like them? I don't know. Maybe it's because they were founded in 1870, way back in the day. I like these old banks that have stuck around. They are headquartered in West Virginia, which is a little bit unique. Usually I look for banks in, say, California, New York, maybe DC area, or for sure Texas, where the economies are surging, but WESBANCO dominates its market there in West Virginia. It also has branches in other nearby states like Ohio, Pennsylvania, Kentucky, and Maryland. So it's not just a one-hit wonder there in West Virginia. It has a market cap of about $2 billion. And yes, it does pay a dividend, and it's a nice one right here at 3.9% yield. But let's go take a look and see what is happening with these earnings estimates. How does WESBANCO have the #1 rank when a lot of other companies do not right now? Let's check out those estimates. So on Zacks.com, we have these detailed estimate page. And here for WESBANCO, you can see 2022 estimates are expected to come down 16%. And some of that is because the banks had to make sure the reserves were in order and all of that for the possibility of the slowing economy here. So we have some earnings contraction here in 2022. But take a look over there at 2023. You can see a 10.6% gain, back up to over $3 from the $2.96. That's the estimate this year. And if we look down, we can see one analyst, there's only two estimates here. So it's not one of the really bigly covered of the banks, as you might imagine, because it's in West Virginia and it's a smaller regional bank. So just two estimates here, but one has been raised in the last 60 days because with the Fed raising, this is when the bank earnings will rise. It's just goes directly to earnings. And this is an aggressive increase, as we've seen. So the banks should be in the driver's seat as far as earnings growth in 2023. And you can take a look and see what it looks like on the chart. So the big collapse there during the pandemic, and now 2021 was a big rebound. 2022, a little bit dicey again. But 2023, you can see that brown dashed line there. It's looking like it's going to be right up there around where 2021 was. And this is a good thing. And you can see also from this chart what the stock is doing. So it had the rally off the pandemic lows in 2020, but it's mainly just been sitting there. The banks have not been going up like all of us, including myself, has assumed it would as the Fed started to aggressively raise, because the banks are one of the few industries in the position to see rising earnings as the Fed raises those rates. Again, it goes right to earnings. Also, keep in mind that suddenly you might be able to get some kind of return in a savings account. Remember those? Many of us don't even have it. We only have a checking account. But if we could get 2 or 3%, maybe even more in some kind of savings account or possibly a CD, we might be parking some of our money in the banks. And yes, they will make money off of us, putting our money and keeping it there in the savings. So I really like the banks heading into 2023. WESBANCO is, as I've said, one of my favorites because it does pay the nice dividend yield. PE is just 11.8 here, so it's not real expensive. The shares have been weakening this year along with the rest of the market. If they weaken further, they're going to be even more of a deal. So you're getting cheapness, you're getting a nice dividend, you're getting rising earnings estimates for next year in 2023. That's a great combination. So I'm a big fan of the banks, and WESBANCO as a smaller regional bank, you might want to keep it on your list. Again, ticker WSBC. And now I'm going to throw it over to Brian with his Zacks #1 rank, his top stock pick, and it's not a bank and it's in a completely different industry. I'm sending it over to Brian.
Thank you, Tracy. My top stock pick this week is Energy Recovery, ticker symbol ERII. Energy Recovery designs, manufactures, and sells solutions for seawater reverse osmosis desalination and industrial wastewater treatment globally. Desalination is a process in which the dissolved mineral salts in water are removed. It's a very standard process applied to seawater to obtain fresh water for human consumption as well as agricultural purposes. The company develops highly efficient energy recovery devices that are used in that process with the goal of making desalination much more affordable, as it can typically be a costly endeavor. That's a bit about the company's services. Let's switch gears and take a look at its industry group. Energy recovery is a component of the Zacks pollution control industry, which currently ranks in the top 6% out of more than 250 industries. So what does that mean? It means that stocks in this group are experiencing positive earnings estimate revisions, which is the most powerful force impacting stock prices. I'm constantly examining the top industries, and when you do that, you start to notice individual stocks in certain industry groups that are making new highs almost daily. And these are the industry groups I like to focus on to narrow down my list of stocks with the greatest profit potential. Quantitative research suggests that approximately half of a stock's price appreciation is due to its industry grouping. So focusing on the top performing industry groups can provide a tailwind to our investing results. Another big plus for this industry, as we can see in the key metrics section down below, is that projected earnings growth is well above average at 19.33%. Moving to our snapshot page, we can see that Energy Recovery is a Zacks rank #2 buy and has an A rating for our growth style score category. And look how well this stock has held up this year amid the bear market. The stock is up better than 10% on the year, while major indices continue their downward trend. The company has missed on earnings estimates just once in the past 4 quarters, with an average beat of over 103%. So Energy Recovery has been consistently beating earnings estimates, and the stock price movement is reflecting this. Analysts have increased earnings estimates across the board. For the full year, EPS estimates have been raised by 32.43% in the past 60 days. The Zacks consensus estimate now stands at 49 cents per share, which reflects growth of 104.17% relative to last year. Sales are expected to climb 24.92% to nearly 130 million. So a big reason why this stock has held up well and why it will likely continue to do so is because its sales and earnings are expected to flourish, all while many stocks are seeing their earnings estimates decline. So Energy Recovery, ticker symbol ERII, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here each and every week on Zacks.com. From Tracy and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.